Good morning, our dear subscribers. The FutureTrend channel is again with you. This morning, the financial markets are under a kind of upside pressure. The pressure, upside pressure of the stock markets. As you know, yesterday the Chinese authorities told that probably they are in kind of negotiation process or regarding future improvement of trading relations between China and the United States. Of course, such kind of news boded rather well for the financial markets. As you know, the yen under the downside pressure at the moment because of the rising stock markets. Yesterday, the Dow Jones rose above 2.8%. Also today, the Nikkei is quietly strong. Altogether, if such kind of process continues in the nearest future, we could see some further losses of the United States currency against a majority of majors besides of the Japanese yen. As you know, the Japanese yen has a tendency to weaken in case of rising risk-friendly environment. What else? At the moment, the euro dollar are on the rising path. Let's see the chart in the euro dollar. And now we are around 124.50, and we'd like to mention the next important barrier to the upside in the form of the highs of 2018 around 125.55. To say the truth, from the point of view of longer term picture, the next barrier located around the longer term downside channel, longer term downtrend around 126 2030. While below this line, the pair should remain under the longer term downside pressure, but as you know now, the situation is quite different, and break above the recent highs around 125 and a half should accelerate the upside pressure in the currency, and we could see a possible test of this important downside trend line very fast. Break above this line should mean a kind of very important penetration, which could finally result in much higher levels for the euro dollar this year. Now let's see about shortly about the dollar yen, where we advise shorter recommendation. At the moment, we keep a short strategy at 105.20. Despite of the current kind of bullish phase in the currency, we suggested that while below 106.20, the kind of immediate downside trend line, we should remain bearishly oriented in the pair. To say the truth, from the longer term picture, let's see the daily graph. While we trade below 107.90, we suggest that the pair should remain under the bearish mood. And regarding the cable, which at the moment trades around 142.35, the situation is more or less encouraging for the bulls in the currency. As you know, next important barrier is the highs of 2018 around 143.45. Break above this line, together with the break above moving average weekly line, which located at the moment located around let's see, around 142.70. Break and close above this line should propel the cable much higher from local levels. That's why we still keep our long trade recommendation. The dollar Swiss are under the selling pressure now, and it's a little bit strange. from the point of view that, for example, another safe haven currency, Japanese yen, are under constant selling pressure at the moment. But here, don't forget about the diplomatic war between the Western and Russia. And of course, from this point of view, this kind of political pressure does not bode well for the dollar Swiss. And from this point of view, there is another reason to sell the dollar Swiss, because if the diplomatic kind of war will turn some later in a kind of another confrontation, of course, it will mean much higher levels for the Swiss franc as a safe haven currency.